Good Tuesday afternoon to you. Welcome to the John Sanchez Show on Newstalk 780 KOH. Pleasure to be with you and a pleasure to be with my co-hosts. Let's go around the horn. Got the full house today. Dwight Millard on Q Home Loans. How are you, my friend?
I'm doing fantastic. John, how are you today?
Good. Glad to hear it. We're all trying to stay cool. Got a little storm coming through here, Dwight. I know you're not here locally right now, but Corey and I are enjoying the thunder and lightning and hopefully no fires. And soon to be rain, I hope.
Yeah.
Corey Edgevidge Realty, how are you?
I'm doing great, sir. How are you?
I see some stress on that handsome face of yours today.
No. I was just looking outside because it's very ominous, but I'm with you. Like, it would be great if it rains and the snow and
Yeah,
all the stuff. Like,
absolutely. You
Yep.
betcha. All righty, fellas. Well, good to be with both of you and good to be with all of you. Let me tell you what we have lined up for you. We're going to recap today's very nice trading action today. I'll just give you a little preface on that side of it. Then we've titled today's show, The Homeowners Mid-Year Checkup, right? We get health checkups. We do hopefully some financial checkups. But what about one of your biggest assets, your home? When was the last time you gave it a checkup? Right? That's really the question. And, I think the answer, if I had a room of about 1,000 of you, the answer would probably be never. What's involved in a checkup? Well, today, Corey, Dwight, and myself, we're going to discuss the 10 financial questions every homeowner should be asking themselves. From what's my current value? My mortgage, is it, do I have a competitive rate? My insurance coverage. I just had to renew my insurance and it's an issue we're all dealing with right now.
Mhm.
Is the house properly titled? Is everything you have in there, properly protected from an estate planning standpoint? All of these important things, that should be part of a checkup. But again, something no one ever thinks about. Dwight, I'm going to start with you real quickly. Have you ever had anybody say they've done a checkup on their house? I haven't.
No, and certainly not in the detail form that we're going to cover tonight. But every now and then they'll say, "Well, what's my real value?" Because as Corey will tell you, they're usually checking Zillow or something.
Yes.
That's not really helpful. But there's so much now to it, John, that especially like the insurance, like you said, and then we can also talk about property taxes. So there are some benefits to this question, but no, I don't get people, basically saying that. So
How about you, Corey?
No, I agree with Dwight, not in the detailed terms. The biggest one I see is insurance, but I think these days, myself included, it's one of those things that people don't want to mess with because if you have insurance, unfortunately, you count yourself lucky. Like, I don't want to. I don't want to spook it.
That was my situation.
Exactly.
That was my situation. Yeah, you literally make a business decision, right? And you go, man, they just jumped me up, X percent. But then what else is out there? You have your broker shop and they come back and like, nope, So yeah, they have us. Let's just say these insurance companies have us, right? Because they're all increasing it. Either they're not taking new coverage, or they're increasing it, and they know there's nothing you can do about it. So yeah, it's a tough situation. Dwight, you just brought something up, and I did not have this plan today, so I may catch you guys off guard. But I want to rap about this for just a few moments. I'll be more than happy to send you guys or anybody else this article. I saved it. It was in Yahoo Finance on Sunday, and it was an article that caught my attention. It was an estate planning article. But Corey and Dwight, what this article went on to talk about is a major issue facing California residents. Okay, and here's the issue. Correct me if I'm wrong, because I'm not a property tax expert like you guys are, but the way it used to be in California under Prop 13, when you sold your property, or let's say somebody inherited your property, they would keep your property tax rate. Am I right so far?
Prop 13.
Yeah, exactly. But evidently a law was passed, I think just a few years ago, that said if you inherit a person's property, i.e. most likely your parents or grandparents, that Prop 13, I'll call it protection, does not exist anymore. So there's a massive dilemma going on, especially down in the Bay Area where, again, parents bought these homes for cents on the dollar. Now they're worth multi-millions. These kids are going, yeah, I just, inherited, mom and dad kicked the bucket and I just inherited, a $3 million house. That is until the time comes that they get their property tax bill, and then they can't afford to do it, and they end up selling the property. Have you guys heard anything about this? It was the first time I did. It really
John, I'll look at that because the bottom line is that was part of the reason for the Prop 13 is it was what passed along. So it only makes sense that if you bought it 20 years ago, you should be grandfathered in from the moment that they passed it. But they get really sneaky, and Corey will tell you, they get really sneaky. They want you to do a little building permit for a little,
Sure.
2x2 shed
Yeah.
just so they can reassess your property.
That's right.
So yeah, no, that's a new one, but that
Yeah,
takes
and
away
again,
that benefit.
and it was on the inheritance side of things. I didn't say anything about if you just, outright sold your house, if the new buyer gets, again, I'll call it the stepped up tax basis, or do they get to keep your own? I've got to look at that further. But Corey, any experience on your side with
No,
that?
no, and I think again, I'm not in California, but I don't think a new buyer would get it. So, for instance,
Okay.
if I sold my California house to you, you don't get my tax rate because the Prop 13 is based on the sales price.
Right.
Right.
And I think it used to be 1%. Now it's probably, who knows what it is. The inheritance thing doesn't surprise me because,
Yeah,
again,
me neither.
California is horrible, but anytime they put a tax in there, it starts super small and
Yep.
then it expands. So I haven't heard that, but it would not surprise me in the
Right.
slightest
Right.
if they're doing
Right.
that.
Yeah.
Okay.
Yeah, John, my aunt had a house in El Cerrito and overlooked the Bay Bridge and the Golden Gate, and it was
Yep.
just, she bought it, in the 50s.
Sure.
And her property tax, I think, were $82 a month, and the house before she passed was probably a couple million, or
Yeah.
whatever.
Yeah.
So to your point, and I don't know if her girls my cousins kept the house or not, but there was no way she could do anything because she would be then, you don't want to mess around with that $82 a month
Right.
tax,
Right.
and so, but the moment she sells, to Corey's point, that now goes, let's say you sold it for 2 million. I think it's still 1.25. I'd have to check, but 1.25 of the sales price.
Yep.
Boy, they went from $82 to 1.25 and 2 million. They just got their, they just hit gold, so
Yeah.
yeah.
Yeah. Exactly. Yeah. So I thought that was really interesting. But again, something like that, looking at your property tax bill, it should be part of the financial checkup. How often do you guys hear or see, or do you have any experience of people finally looking at the property tax bill and going, man, something's just not right on this, and basically appeal it? Any experience
We've
on
been
that?
through it. Yeah, I've been through it.
Have you?
That's actually how I met Mr. Bondsma
Is it really interesting?
way back in the day because we were appealing a very huge tax bill on a huge project that I was involved in. And it's not an easy process. It's,
Yeah, I can imagine.
Nevada taxes differently. They tax on depreciation. It's not such a standardized way of saying
Hmm.
your house sold for X, so here's your taxes. It's all based on formulas, and you have the right to appeal it. And there's a certain window, and you can go down to the county chambers and go through, but you better have a very good case. A lot of people appeal it, at least in my experience. They appeal it just because they think it's too high. Oh, this is too
Yes.
high. Well,
Right.
that doesn't
Right.
matter, right? Like,
Yeah, exactly.
you have to have a reason as to, because all your neighbors are high too. So there has
Yeah.
to be a reason why yours is different. That was the huge deal up at the lake. Remember when they assessed everybody the lake
Mhm.
views? The assessor's office fought them for years, lost at the Supreme Court, and then had to pay back tens of millions of dollars
Yes.
to these people.
Yes.
So Nevada's a little more complicated than California.
Absolutely.
And I think, Corey, aren't the appraisers county appraisers that actually will go out? You can't use an independent, right? They're
They're county
internal,
appraisers,
aren't they? Yeah.
and most of them are licensed appraisers. Like,
Yeah.
in my experience, these people know what they're doing. So again, a lot of times it's just like, no, my taxes are too high. Like, well, it's expensive to live, unfortunately.
Mhm.
Yeah.
And
Yeah.
that's just how it
Yeah.
is.
Yeah,
Yeah.
absolutely. All right, good. Thanks, guys. Do appreciate it. So it's gonna a lot of great things we get to talk about on the topic here and momentarily. All right, let's get down to the stock market side. So I used the analogy, guys, on the show yesterday when we're talking about how this market is reacting, and this market is driven not so much about interest rates, definitely not about oil because oil's been rising and it's not having a negative impact on the market, but obviously on the semiconductor and the memory stocks. And the analogy I gave was, we all heard the adage: 2 steps forward, 1 step back. Well, now it feels like it's 3 steps back and 1 step forward because we've gone through 3 consecutive days up until today where the semis just did not perform and therefore the market didn't perform. But all of a sudden today, here comes the buyers. So we snapped that losing streak on the market, that 3-day consecutive losing streak. And again, there was no specific news behind it. It had a little bit of earnings number on I shouldn't say earnings, but guidance from Taiwan Semiconductor. The Nikkei reported that the company plans to raise chip making prices by roughly 10% in the year 2027. And this is something to keep in mind because Lord knows chips are used in everything. It's not just computers anymore. It's our cars. It's pretty much everything we use. And this is what we're starting to see. These companies are starting to raise their prices because the demand is so very strong. And they can do it. So Taiwan kind of got that ball rolling this morning, and they finished the day very nicely. 5.5% gain, up $22.14 to $424.44. You had Advanced Micro Devices up $40.86, 8.11%. Intel was up 8.64, $8.39 gain to 105.45. So you get the idea. The chip stocks, they were the whole story. We didn't have any major economic news, so the chip stocks were everything today. 3M, a Dow component, very strong earnings numbers coming out of that company. They finished the day with a big gain, $11.65, 7.32% to 170.76. General Motors, quite surprisingly, had a real strong earnings report also. They finished up almost 5%, 4.89 to be exact, $3.71 rise to 79.51, so on and so forth. So it was really that simple. It was a chip-driven market. I'll tell you what these markets did. We'll hit the commodity side as well as, of course, the mortgage side when we come back with Corey and Dwight. Welcome back to the John Sanchez Show on News Talk 780 KOH with Dwight Millard of OnQ Home Loans, Corey Edge of Edge Realty. All right, we're going to get to our topic here momentarily, the homeowners mid-year checkup. But in the meantime, let's tell you what this market ended up doing today. Like I said, it was a solid day across the board. Finished up 385 on the Dow. That was a 0.74% gain to close at 52,224. Nasdaq a 329-point increase, 1.29%, closing at 25,837. S&P up 66 points, 0.89% to close at 7,509. Oil was a strong one today, $2.40 gain, 84.99 a barrel. Market again not paying attention to it. Gold rising $60.60, 4,076.40 an ounce, and a 3 basis point increase, Mr. Millard, on the 10-year yield of 4.63. How'd we do on the 30-year mortgage?
Well, John, nobody's going to like this, but according to Mortgage News Daily, we are up 4 basis points, 6.75 on the 30-year fixed rate. Yeah. And you know what's interesting, John? I looked at my mortgage-backed securities market all throughout the day. We opened up down 16 basis points. We held 16 basis points all the way through close. We never budged off of down 16. So it just, and again, I don't know if it's just the, inflation, narrative, if it's the oil, I don't know. I mean, or is it just moving from this commodity over to equities? It's all of them.
This is what the street is saying, Dwight. It's the anticipation that the next move of the Fed is going to be an interest rate increase. The bond traders are just forecasting that down the road. That's all it is. They just are dead set in their ways that the Fed's going to be, again, the next move is going to be an interest rate increase. Whether they're right or wrong, we will see.
Yeah.
Yeah.
I mean, John, this is really, and you highlighted it, I think, last week sometime when you were looking at what the mortgage back a year later. Remember, we went through all this ups and down, this gyration, and it was almost the same. But this atmosphere, this environment we're in has been much more difficult than the 08, 09 meltdown, John, because this has been long. Yeah. Well, at least you had stuff going. Here, you got zero refinances. If you go back in history, most companies and even individuals, if you were doing your business right, you probably had 75 to 80% was purchase business and 15, 20, 25% were refis. Okay. There are no refis, for all intent and purposes. So everybody's chasing the very few, purchases that are out there. And this has been, you go back, remember we all talked about this was March of 22, March of 22 when they went on this interest rate increase. And here we are. This has been a tough one for a lot of people. I talked to a lot of people in this industry, and it's been a long ride. And so here we are talking about interest rate increases again,
right?
4 years later. Almost 4 years later.
But the question is, let's throw it over to Corey's desk, and that is, the question is it having an impact on home sales and prices? It doesn't appear, based upon, at least here locally, our last report.
So two totally different things. The impact on number of sales, absolutely. I agree with Dwight wholeheartedly. It sounds so strange, but the amount of activity that happens is less than what it was during the great financial crisis. Like the amount of deals that are going on. That's what's causing high prices. Because there's no inventory.
Right, repeat that again.
The amount of activity. So the number of deals in the market is way less than during the great financial crisis.
Okay.
So the total activity level, which the realtors rely on, the title companies rely on, everybody relies on. Now, the price of all those things has gone up. So I can't really speak too much to income because the prices are double or triple. So I can do half as much and make the same money, if that makes sense. But the actual amount of activity across is incredibly low compared to the old days, if that's what you want to say. And I think that's what Dwight's alluding to is there's, it looks like activity, or you can say, oh, the median price is up, everything must be going gangbusters. Well, sure, I mean, it is, but the amount of things happening is very little. It'd be like, and I know this isn't how it works in your world, but it'd be like saying Apple's $500 a share, but I'm only, trading 100 shares every 6 months,
Right.
right? Like it looks
Right.
great, but
It's coming
underneath
down
there's
some.
not really a lot happening.
Right.
And that's what's been going on since 22, to Dwight's point.
And John, I mean, Corey brings up, he gets right to the heart of it. This is affecting everybody, right? Appraisers, title companies. There were I had a conversation with a couple of people yesterday, and we had one inside of our company got laid off because the activity's not there inside of a specific type of product. I mean, just not there. And you're hearing that more and more. So a interest rate increase is going to be horrific for this industry.
Right.
Yeah. And the people that depend upon, the interest rates and the delivery.
What do you think? Well, first of all, you have to believe that Kevin Warsh, the new Federal Reserve Chairman, is behind the scenes being controlled by Trump, which was one of the fears of everybody of him getting confirmed, which he was. But why do you think he's not calming the markets more? Because no one's going to win, to your point, Dwight, if your industry slows down, right? And layoffs happen and so on and so forth. Why do you think he's not coming out and trying to calm things a little bit? Because he's hearing from lending CEOs and home builders and so on and so forth that he's got to do something. Why do you think he's being so immune to it?
Yeah, I don't know, John. I mean,
I don't know
maybe we underestimated his allegiance or something.
Yeah.
I mean, that I don't know, Corey.
Yeah, but I'm guessing, and I'm just purely speculating here. I don't think he'll raise rates. I just don't think he'll do it. But I do think some of these committees will come up with new ways to look at the existing data that'll show it in a better light, not any conspiracy theory, just like, hey, this is the way we're going to market now. I think is it the jobless report, or one of the reports is changing next month. And I was listening to CNBC a couple of days ago, Eisman, whatever the guy's name is, was saying they already are factoring in a point or half a point reduction just because of the way they calculate it now. And it's one of these new things. So I think he's gearing up for a rate decrease, but it's going to take some time to get the data to follow. And it's going to be the data from the committees. Does that mean? And I'm not saying that's a conspiracy. I'm just saying it's a different way of reading
that. Logical. And what Corey's referring to, he announced at the Fed meeting a couple of days ago that he's creating 5 committees to basically rip the Band-Aid off of Fed policy, looking at different ways, again, to measure economic activity, inflation, so on and so forth. But he was also very adamant. Inflation is his number one objective, right? Keeping inflation down. So if he doesn't raise rates, if the economy takes off, if he doesn't raise rates and inflation goes to the roof, he's not going to have a choice but to raise interest rates to slow things down.
But
the inflation number can change depending on the metrics that go into calculating it.
That's right.
John, you talked about that on Tuesday or last week or Thursday. Remember, we were talking about the inflation. He's going to be at 0, and you go, they're just going to change the metrics to get it 0.
Yeah, exactly. You can always play with the numbers. Well, remember when Trump fired the gal that was in charge of Bureau of Labor Statistics, the BLS, and all of a sudden those numbers every week they just are at historically low levels. This new person's just doing an amazing job. Absolutely. Amazing job. Oh, don't get me started on Washington. All right. When we come back, the Homeowners Mid-Year Checkup. That is where we will go, something we can control. Welcome back to the John Sanchez Show on News Talk 780 KOH with Corey and Dwight. All right. Once again, it was a good, solid session across the board today. Finished with a gain of 385 on the Dow. NASDAQ rose 329 and the S&P up 66. All right. It's time that we get to our topic. Again, the Homeowners Mid-Year Checklist. Again, most of us schedule annual physicals. At least we should. We take our cars in for service when the oil light doesn't come on yet. We review our investment portfolios. But what about, again, one of our largest assets, if not the largest, which is our home? Most families, well, their home is their single largest asset. Yet many homeowners have never reviewed it, or if they have, it's been years. So today we're going to be discussing how we conduct a mid-year homeowners financial checkup. So Corey, I'm going to start with you. Checkup number 1. Do you know what your home's value is worth? Why do we want to know that in our own annual checkup? Why is that so important?
Is it important in your day-to-day life? Probably not. Is it a good thing to know for estate planning reasons? Of course it is. to get an idea of what your estate may be worth, the assets you hold, in case you need to do any debt financing, anything else to get an idea. And I agree with Dwight. Zillow is not 100% accurate, but it's going to get you
It's a good
close
ballpark.
enough,
Yeah.
you know, where you need to be. And it is a good thing. I meet people, not so much anymore, but, leading up to right after COVID and coming out of it for those first 2 years when things were just going bonkers, you'd meet with people and be like, well, my house, I don't know, it's probably worth 250. I'm like, no, it's worth about five. Like, so it's good to
Yeah.
know. And maybe it gives you some different options. And I'm not advocating this, but maybe you wanted to start a business, or maybe you got to
Mm-hmm.
pay off some credit card debt, or maybe you want to
Mm-hmm.
put a kid through college. Like, it's just good to know these things in case you can use the money for something better or just for estate planning reasons.
Well, I think also what I deal with, and I just had this conversation today with someone, they had modest financial means, but they had a lot of equity in their home. And so, from a psychological standpoint, we've said this a million times, people feel wealthy based upon probably number one, what their home is doing more so than their 401k. 401k is not far behind as far as the mental impact. But yeah, if you know, yeah, my home is, I've got X amount of equity, you're going to be a little bit more inclined to go borrow or to go buy a car, go do this, go do that, because you know you can always come back to that piggy bank again, whether it's right or wrong. So yeah, I think it's a very, very good idea. Dwight, any points you want to add on that?
No, I agree with you. What's interesting is I don't think they're going to the piggy bank, like you said, as much as they were in '08,
Oh, yeah,
'09.
not at
So
all. Not with these
yeah,
rates.
yeah. So, but no, it does give you a sense of comfort. And people, just everybody around me talks about it, and probably with Corey. So yeah, you're in the trenches. You hear it all the time. Well, my home went up this. So yeah, you're right. They feel wealthier
Corey,
for
should we
sure.
be tracking in our checkup? Should we be tracking comp sales?
It just depends. Like, I think most people, the vast majority, are set it and forget it. It's their house. They live there. It doesn't matter what it's worth, right? As long as it's a roof over their head. And if it's paid off, it doesn't matter. If they're making payments and they can afford them, it doesn't matter. So, you know, if you want to get really down in the weeds and figure out what your house is worth and why it's worth that much, and I have a
Mm-hmm.
swimming pool, but my neighbor doesn't, so is mine worth more? All that stuff. It's good food for thought, but it can also go the other direction. Some people see that and say, well, heck, why don't we just buy that nice big
Mm-hmm.
speedboat that we've been looking at? I mean, we
Right.
got 200,000 in equity. So
Right.
it cuts both ways, but as far as your day-to-day life, it's not going to change anything unless you can use the capital towards something that
Yeah.
that helps your cash
And
flow. Or
when we write a financial plan, specifically a retirement plan, we like to know what it is
sure, of
because it
course.
helps.
Yep.
Hey, you're going to stay here. You're going to get rid of it. If you're going to get rid of it, what are you going to do with that money, and so on and so forth. So
I think
yeah,
especially as you get up there in age, you can say, "Well, wow, I didn't know I had 1 million in equity because we could
yeah,
sell that and we can
that's
fund
right.
this and we can go watch the
That's right.
grandkids." And
Mhm.
maybe you've always wanted to live a certain life and you didn't think you could, but now you
You,
can.
you know what I'm getting more and more of? I just had this conversation with a potential client last week. People are not selling their primary homes here in Reno. They're renting them out, and then
Mhm.
they're either moving to another part of the country temporarily, like low key living, like just rent a condo or rent an apartment or something because it's their favorite area to live, or they want to be next to the magnet, the grandkids. Or the most common I'm seeing, they're actually going out and they're buying an RV and they're getting out of here for a couple of years.
Sure.
They're letting
Yep.
they're letting that tenant make the mortgage payment for the next couple of years. Again, we've had nice appreciation. They anticipate more appreciation. They're out there living their life, and then they're coming home and saying, "Hey, thank you, Mr. Tenant, for making my mortgage payment for the last couple of years while we've got to enjoy quasi retirement." So yeah, I'm finding that really interesting.
Well, and John,
Absolutely.
there seems to be an elevated interest right now too in the reverse mortgage arena where you don't have to
Had that
rent it
call
out.
today
You
too.
can just,
Yep,
yep,
that's
yep.
right.
So
Had that
yeah,
call today.
there's vehicles out there, but to your point.
Indeed.
Yeah.
All right, Dwight, this one's you. Checkup number
Mhm.
2. Is your mortgage still the right mortgage? What should we be looking at in our checkup on the mortgage side?
Yeah, so I mean, for the last few years, current interest rate has been kind of the yawner. No, there's nobody can do anything right now with based on current interest rates. John, there was a lot of if we even talked about on this show. Remember when we got into 7 and 7.25? Well, what these people are going to be
Hmm.
able to refinance sooner than later. They're at 7.25.
Sure.
Well, they still have not had the ability yet to even look at refinancing. So know what your current
Right.
rate is, so that if you get a window of opportunities, and this is how it comes in windows, then be ready to know what you are looking for, and be poised. I mean, listen to the show. We talk about it every week, what the mortgage, average mortgage rate is. So, I mean, know that usually will come on your mortgage statement. Usually it'll tell you what your interest rate is. And Also, it'll tell you the term, how much longer you have, because if
Yeah.
you're sitting inside of 10 years and you have an opportunity to do something, you're probably not going to go back to a 30-year. I mean, chances are, I mean, you're going to try to stay within a 10-year or 15-year term just to stay kind of current or even equal with what you're trying to do. So monthly payment is always the big one, John. And we, we're going to talk about insurance here. That's what's been putting a lot of pressure on monthly, on the monthly mortgage payments, which again are on your statements. Your statement
Mm-hmm.
tells you a lot of information. So that's the quickest way to kind of maybe dive into that and go through it and understand it. And then just kind of, like we were talking about, know your refinance opportunities right now, John. I think they're very, very specific needs right now on refinance opportunities, meaning, new purchase of something big, a big purchase. Education and debt consolidation seem to be just really what I see out there that people are using any refinance opportunities to do. They're just not taking money out to hope, I'm gonna, do something with it down the
Yeah.
line. So
Yeah.
yeah.
Okay. All
And
right.
those are
Let's go.
coming through. Those are coming through HELOCs too, John. Those aren't coming
Yes.
through right now doing your
The
refinancing
refinance.
your
Yep.
big loan. Yeah.
Yep. You're right. You're right.
Yeah.
All right. Let's go to checkup number 3. Is your homeowner's insurance adequate? And again, this is a very, very important one. I attended a webinar I think it was last Friday, and it was fascinating. It's a software package that we can purchase, and I'm thinking real seriously about it. And it uses AI. Literally, we put in the client's address. And Corey, I thought about you because your insurance situation. You put in the address and it will search databases. I mean, again, it's all AI driven. So just imagine what it can do, but it will come back and tell you. What we do is we scan in the client's homeowner's policy, and we can do it on auto and I think pretty much any insurance policy, but let's focus the home. So we scan in the homeowner's policy. It will come back and say, Corey, you're paying a competitive rate, or Corey, you're way overpaying or you're underpaying, right?
Mm.
It will then take a look at the amount of coverage you have. It will then search all the databases to determine, is number one, do you have the right policy? In other words, do you have enough liability protection? Do you have replacement cost in there? If you have replacement cost, is it accurate? Because you got to think about it. When you get a policy, it's, they're 1 year at a time. Well, in a rising inflationary environment where home building costs go through the roof, like we've experienced, that replacement cost that was quoted to you on, March 15th of 2025 when you renewed your policy may not be enough money now. And Lord knows we've all seen stories and had stories of people that thought their home, the replacement cost was 500,000. They get, into a fire and replacement cost is 700,000. They're like, I don't have 200,000, so I walk away. Right. So that's kind of where the technology side is going. So I think that's really important. Obviously, we talk a lot about the liability protection, having umbrella insurance. Most people still, I find, have zero. Knowing what your deductibles are. Do you have enough money tucked away in emergency funds? If you have a high deductible plan, do you have enough money to pay that so you're not cashing in on investments? Again, if your home was destroyed tomorrow, here's what you need to ask yourself. Could you rebuild it? Would you have enough money through a proper insurance company to rebuild it? If the answer is no, then it's time again to take a look at that insurance policy. But you've heard us talk till we're blue in the face about rising insurance costs and how it's impacting the home building market and sales and everything else. So please take a look at your coverage. Talk to your insurance professional. And I don't know about you guys, but I'm finding very few people that I use a broker. I've been with him for 25 years. He shops it. I'm confident in his recommendations. But a lot of people, guys, they just go online and they try to find kind of, online lending, right, Dwight? They try to find the best deal out there, and they have no idea what's stuck in that fine print until they need it. And so,
Well, John, what's amazing about that, when they buy a house, it's the first thing I tell them, you need to start looking. And you know what? They don't do
100%.
anything. They're pretty derelict about it. They don't do anything.
Yep.
And then we're 3 days from closing, and it's like, hey, I got to have insurance. So it's just, like you said, it's,
Tough one.
they just pick what they can get right there.
Yep. And the cheapest. All right. When we come back, Corey's going to wrap us up in checkup number 5. Is your title correct? This is a very, very important one. Welcome back to the John Sanchez Show on News Talk 780 KOH. Mr. Corey Edge, can we get your phone number, sir?
673-6700.
Thank you, sir. Mr. Millard.
Yeah. 240-2022.
Beautiful. Thank you. Okay, Corey, let's go to checkup number 5. Checkup number 5. Breaking news. LeBron is staying in Los Angeles. Wow.
He's staying?
That's what ESPN just came across my computer.
We went through all that for nothing?
All that.
Jeez, man. I got to return all these jerseys now.
Yeah. You talk about a negotiating tactic. Yeah, I'm leaving.
Maybe, yeah.
Yep, that's it. That's a good agent right there.
because I don't have enough money. I'm going to go ahead and play hardball.
Exactly. Well, I was thinking, it's like, okay, so you leave, you go to the Warriors, right? You're still in California. You can't do it for tax reasons.
Yeah, that's true. Yeah.
You're going to pick up your what, 70,000 square foot house he has in Beverly Hills. I don't know. The whole thing didn't make sense. But anyways.
Interesting.
All right, Corey, let's talk about title. Is your title correct? This absolutely should be part of your homeowner's mid-year checkup.
Yes. So we always recommend, if you need one, get a trust. And part of that thing is, if you have a trust, we want to check the title. Obviously, John, you know this, a good person that handles that for you is going to make sure that the trust is funded
Like
with the
specialized
title
trust
of your
and estate
house.
plans?
Yes.
Okay, thank you.
You know exactly what. But if you didn't use somebody good like that, then you want to make sure, hey, I have this trust. Look at the title of your property and make sure that it's titled in the trust. I see that a lot, and it's an honest mistake to make. Everybody, I thought he did. I thought she did. I know you're supposed to do it. No, they never put it in there. Super simple to do. If you need to look at your title, I still get people that be like, well, I think the title's in my safe somewhere. Like, no, your title hasn't been in your safe for years. Just go to the Washoe County Recorder's Office or the Washoe County Assessor's Office online, and you can pull it up, and it'll tell you exactly how that property's titled.
And yeah, I'll tell you what, we look at both when we're doing our title research. I see different stuff.
Sure.
Do you come across it? Okay. Yeah.
Yep. Yeah, every once in a while. And so
Yep,
the easiest way is to go to the recorder's office, look at the actual deed, the last one recorded, and see what how it's written. And that is the gospel. That is the title right there. If you don't have a trust for whatever reason, but you're married, or even if you're not married, but you want to make sure, like, if I get hit by a car, I want the person I'm living with to get the house, make sure you have a right of survivorship. Yes. It can be community property. It can be joint tenancy. It can be whatever you want, as long as it's right of survivorship, so that it automatically passes to the other person that's on that title with you when they go. And then you can talk to your accountant whether you should be titled as joint tenancy versus community property, because there are different ramifications in the state of Nevada when somebody passes away, different tax treatments. And I learned that the hard way with a family member. I had no idea that there were different tax treatments, but there are. So if you're worried about those things, then maybe talk to a good accountant or tax attorney to explain to you, if my spouse passes away and we're joint tenants with the right of survivorship, what does that mean? Because sometimes it doesn't mean exactly what you think it means.
Yeah. Well, along those same lines too, people think they're all protected joint tenants' rights to survivorship, which in a lot of cases they are. But you run across this a lot, Corey, and that is the $500,000 tax-free exclusion that you get when you're married. Again, as soon as that first spouse dies, you got to be there 2 out of the next 5 years to still utilize that. And many people forget about it. Well, you dealt with my father. Did you guys make it under that $500,000? You did, didn't you? That $500,000 exclusion.
It was a race at the end, because if you remember, I was over there fixing the fireplace, doing all this stuff because he had been trying to sell it with somebody else that didn't work, and then we came in, and so yeah, it was a fight. It was a race at the end to get it underneath whatever
to get the 500,000
state restriction it was. Yeah.
Yes, exactly. Why, thank you.
Of course.
He's looking down from heaven, thanking you too.
He was always a pleasure to work with, John. He was a great guy.
He loved both of you. He always just raved on and on. Yeah, you guys did great work with him. All right, great job, fellas. We'll do it again tomorrow on the John Sanchez Show. We'll have an estate planning topic for you tomorrow. I promise you that. God bless. Have a great afternoon.